Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Good, good. Hey, your mom called. She said hit the subscribe button, so that'd be great if you could do that. Really appreciate it. Helps us out here, and thank you for watching and following along. If you're in Houston or San Antonio this Friday or Saturday, Houston Friday, San Antonio Saturday, come meet up with us. We're going to do a Jazz Wealth meetup. We'll be in those towns. Actually, we'll be in Denton as well if you want to hang out. So those are the locations and the times we'll be there. Got a lot of emails from clients that will be in Houston, so that might be a busy one there. And they've also let me know it is not called the Cedar Creek Saloon. You just call it the Saloon. So we'll see you at the Saloon if you're in Houston. Alibis if you're in San Antonio, and Dusty's Bar and Grill. I only picked it because it says Dusty's, right? And that's, you know, well, that's me. So we'll be out there for that. Thank you for the support. Thursday, the Wine and Wealth will be done by Eric because we will be hanging out at Dusty's in Denton, Texas there. So happy to meet up with any of you that want to go. If you're in San Antonio, you're a Drum Corps fan and you want to go to the show, we do have tickets. We have, I believe, 8 left if you'd like to go to that one. So all we're asking is for you to subscribe to Haley's channel and then shoot her an email, and we'll get you the tickets. We'll be sitting right next to you. So we'll hang out and enjoy the show together. All right, moving on. Stock market today. I've got some things that I want to talk and teach you about if you don't mind. So let's do that. So first off, Jerome Powell out there, of course, the Fed president, and here's his words. He said, essentially, the economy is no tighter than before the pandemic. Those are his words. And then he says, but I'm not going to send any signals to any meeting decisions today. You know what that means? That's Fed talk for, hey, we're not going to cut in July, right? They were trying to figure out yesterday, July, September, what's it going to be? Well, this means that July is out, right? So the rate cut will come in September, and basically that's been all but confirmed at this point. And he also commented about, hey, we don't follow politics, right? That it doesn't matter to us. If we want to cut later or through the election cycle, we'll do it. We don't care. So we're all looking now for the rate cut in September. Now, as far as the stock market goes, well, basically, you know the old saying, the bulls take the stairs, the bears take the elevators. That's where we're at. I said it back in here. The bulls take the stairs, meaning it's a slow, drawn-out rally. The bears take the elevators. See how sharp and quick the declines are? That's just normal. That's how things work around here. People panic faster than they get greedy, and that's what you see there. Now, small day up in the market, right? So about 0.5%, about 35 points in the S&P, so that's cool. However, it was a day where everything else supported, right? The Magnificent Seven that everybody gets excited about, no, that's not going to cut it, right? So if you look at something like Microsoft, Microsoft was down today. NVIDIA, down today. Okay. Apple, basically flat. Amazon, basically flat. We talked about NVIDIA. So where was Alphabet down, Meta down? Right, so the Magnificent Seven didn't do the lifting today. And that's okay. We're all right with that as long as that continues there. Now, one thing that's kind of interesting, we're now moving into the lesson portion of the show. You know what the advanced decline line is? Or sometimes we say the market's breadth, right? Basically, it's participation. So we want to know how many stocks are, if the market's moving up, how many stocks are participating on the way up, minus those that are not participating. In other words, they're going down. Well, what's interesting is, and I want to keep kind of harping on this a little bit, today we had 79.7% of all stocks in the S&P rising, not falling, right? So who's falling over there? Well, it was the Magnificent Seven, plus like Merck and Eli Lilly and some earnings names, right? But basically everything else was moving higher. Now, the stock market itself is up 18% year to date. So you would think that most days see numbers like that. Oh my God, most things must be going higher. We're up 18%. Here's a breakdown of every single day. So since the start of the year, if more stocks were going up than down, the line is blue. If more stocks were going down than up, the line is red. It's a 50-50 shot, almost perfectly. So we're up 18%, but essentially half the days, nothing's moving up, right? Or more stocks are moving down than up. That's another way to look at this, a little bit more granular to show we don't have a lot of participation on the way up. So who's doing the trick? It's the Magnificent Seven. Well, we talked about that yesterday. Oh, hey, what happens if the Magnificent Seven gets overbought, extended in a pure technical manner? Yeah, that's where it's at. What's happening today? Oh my God, those stocks are starting to fall. Nothing crazy, nobody's getting weird or anything, but those stocks are starting to fall. Now, if you like looking at this, there's a line here at -400 and +400. That's considered full participation. right? We just don't have days where 505 stocks in the S&P are all up, right? It's not all that common. At least this year, it's not common at all. So that's considered full participation. So anything above that would be a day where you'd say fully the market has participated to go higher. Everybody playing along. Anything to the downside, you would say negative 400 means full participation to the downside. Those are really bad days. So we've had 2 full participation days in the first half. Just 2. Meaning 1 to the downside and 1 to the upside, right? If that trend continues, well, there's half a year to go. That means we'll have 4. Is that a lot? Well, man, we're up 18%. It should be a lot. Should it not be a lot? Well, if you look back, here are the number of full participation days by year. So this year, I'm just going to project that we hit 4, all right? Maybe it's 5 or maybe it's 3. I don't know. But we're certainly not hitting double digits at this point. So let's say it's 4. Compare that to last year, 21. The year before, 51, 14, 43, right? We go back in here to 2017, that's only 3. Go way back here before we had computers really doing things, right? It was kind of normal to see that. In other words, we have a magnificent rally in the stock market, and we don't have full participation a whole lot, so it's another confirmation there are 7 stocks just doing all the heavy lifting. We don't have a problem with that so long as the 7 stocks continue to do the heavy lifting. If they don't, you know what happens, right? Hey, the Dow had a great day today, up over 740 points there. 219 of those points came from United Healthcare. There you go. Not much you can do about that. The Dow, by the way, year to date is still not in first place, or is still not in even third place. It is in last place. 8.6%, and that's because the Russell, right? You saw what they're doing. Otherwise, the NASDAQ and the S&P beat that. Anyways. Back to United Healthcare. So United Healthcare actually missed on earnings. It actually wasn't cool. And I thought maybe you'd like to see something like this. And you'll tell me, do you like to go into the earnings of individual stocks a little bit more? Or should we just breeze over it and say, well, that, it had a good day? I thought you'd find this pretty cool. I did this last quarter too. They did guide positively going forward, meaning they said, hey, don't look at this quarter. It's fine. Sorry about that. Not great. But going forward, it's going to be fine. Everything's going to be great, and of course, that's what people wanted to hear today. But here's what I thought was cool. They call this their medical loss ratio. I say the amount of premiums that they paid out, right? So in other words, they collect 100% from you. You pay your premiums, or your employer does, or whatever. They paid out 85.1% of all the premiums they collected. So think of it kind of as like it's not a profit margin, but you can kind of on a broad scale think of it as a profit margin. So we said, well, is that number high or low? It's actually high, and it's climbing higher. So that doesn't bode well for them, and that's the reason why their earnings this quarter wasn't so good. They paid out more. You guys got sick, right? You had more, I don't know, sicknesses. Also, the number of new enrollees, people signing up to now pay their medical premiums, down 2%. So they had less people coming on board than they thought, and they spent more than they thought as well. So that was a little detour that we went on there with United Healthcare. Sorry about that. The Russell 2000, we got to talk about it. This has never happened. It is up now more than 1% for 5 days in a row. That's never happened. So congratulations. You've just watched history there. It almost hit a record last night. And not by, or it has officially hit a record now, but let's take a look at this. So we've done this a little bit. I'm trying to introduce like a little different topic here. So this is, in standard deviations, the extension of the stock relative to its 50-day. It's just a simple thing that people like to look at. Well, yesterday we almost hit a new record there. Didn't quite get there. We are now officially there. It is now officially the most overbought in the short term that it has ever been. So there's just nothing I can show you. Notice how it goes back to the 70s there. So since inception, it has never done this before. I can't tell you what to do, but if you went to look at a truck and the price of the truck was now up here and it had never ever been that expensive before, are you buying the truck, or are you going to say, I'll stick with what I got, right? Think of that when it comes to the small caps. I got so many emails from people saying, now in the small caps, now in the small caps. It's like, what? No, relax. There's only 6 other times that the Russell, well, you saw it. Here's some little stats for you. Only 6 other times that the Russell has traded more than 3 standard deviations away from its 50-day. We are well past that now. Now you say, okay, well, what if I bought it today, Dustin? I missed you. The market's closed. I can't do anything. Well, we want to know about the forward returns. Right? Are you in trouble or are you not? And there's not a lot of data here, right? Because there's only a handful of other times. But the average forward returns are positive going forward, but there are pullbacks. So you're going to have to get ready for that one there. The 1 month forward return, 2.78%, but only positive half the time, which is only 3 out of 6 times, right? And then 3 month returns, positive all but one time, an average 4.41%. However, there were pullbacks, right? So there's nothing wrong with the Russell here. It just got too far too fast. If it falls for a few days, then God bless it. You know what I mean? Buy a little more or something if that's your game. All right, stocks in the news here today. This is the last day of the sort of the large, like global money center type banks that are reporting. Bank of America, of course, they reported today. What's the focus? We did this yesterday. Focus for banks, a little bit different than the focus for, Dick's Sporting Goods, right? How many things did you sell and what profit did you make on the things that you sold? Well, bank's a little different. We're not selling stuff, right? So we look at their net interest income, meaning the amount of money that they made off the spread between what it cost them to borrow and what it costs, or what they charged you to borrow the money, really. So that beat by 4% there. Their spread was 1.93%. So every time they lent out $1 for whatever you bought or took a loan for, they made a spread on average of 1.93%. What I thought was really cool about Bank of America, I get into this stuff, so this is interesting to me. They have a trading division. So their trading division saw their revenues from trading and buying activity, and, facilitating the backs and forths of all the trades, trading revenue up 3%. What was cool is they made a special point to go, oh yeah, guess what? We didn't even lose one day. Every single day in the quarter, we made a profit. Did you imagine that? You're out there, Mr. Trader guy, you're doing your thing, and every day for the entire quarter, you made a profit. That's impressive. So you see the stock higher there. Morgan Stanley, by the way, look back at this. In the last decade, Morgan Stanley has only missed on earnings 3 times. Yeah, it's pretty cool. It doesn't mean it always goes up. Don't say that. Anyways, net interest income for them up 16%. That's very cool. And they also had a really profitable trading quarter as well, but they did have some losing days. So that's okay. It's part of it. Schwab's a little different story. I like what they offer, but it's very competitive out there. So right now, Schwab, they have these bank savings accounts and stuff. There's less and less money going into it because it's competitive. So people are, maybe I'll use a money market fund, or I'll go do this, or hey, I'm going to buy the market, or hey, I'm going to take my savings and buy small caps. Yay, right? No. So if you look at Schwab, we go over here, bank deposits. This was everybody was focused on, so I chose to make a graph and focus on it as well. Here's the number, the amount of bank deposits, and we went back as far as I could go back anyways. But you can see basically this is not the trend you want to see if you're in the banking business, and it's basically all the way back to these pre-COVID levels. Not good, right? So they saw a large influx of money. We'll accept some of this, because remember during COVID, we're like, well, I can't buy anything, I can't go anywhere, so I'll save my money. Well, now it's competitive, and so that was really tough for them. It is what it is for them. That's why you see the stock, or that's the main reason you see the stock lower at the moment. Also, and we'll take your questions. If you have any questions, feel free to post them in there. But I just saw the Biden administration puts forward a potential rule to cap rent on existing rental properties, right? Provided that you own more than 50 of them. We're going to cap it at 5% a year. So you can't raise rents any more than 5% a year. Wouldn't apply to new construction. And I just, I don't know if you like that rule or not, but I thought, whoa, did this hurt the REITs today? Residential REITs like Avalon Bay and Essex and things, people that own apartments, and didn't really do anything. Right? So I'm not familiar with how far along this process is, but I did read that he's trying to take out one provision so that it will allow him to skip some of the normal process of, oh shoot, what's that show? The show Schoolhouse Rock? How a bill becomes a law? That one. Yeah, that one. I remember that from school. That was cool. All right, anyways, let's take questions here. See if you have any there. Eloy says, should I sell my small cap ETF? Okay, so that's a very tricky question, right? I'm going to assume that you bought it and have a profit. What was your target when you bought it? Anything else in life, You buy something, you buy a house. Oh, I'm going to fix it up. I'm going to flip it, do whatever. You have a target in mind, or you're not going to sell it, or you're going to take a loss or whatever. So always have a target in mind. It shouldn't be up to me or anybody else to say, take your profit. Now, that being said, you bought, I'm assuming within the last couple days, and the Russell 2000 has done something that it never has done in history. What are the odds that it doubles something that it's never done in history, right? So it's kind of a glaring answer, if you ask me, especially if it's a pure play on the small caps. Glad you're back, man. I love it. Thanks. I'm happy to be here. I'm glad to be doing anything other than what I was doing, but thanks for watching. Yeah. Oh, so Doc, I guess I should have clarified. I'm not familiar with like the Schwab platforms and their apps. They've changed it so much over the years, and now they have the Thinkorswim, which I'm very familiar with. I meant the products that they offer, right? They're offering competitive rates out there. So it's a little surprising. Maybe it's not clear to people that, hey, if you have this Schwab savings product, that there's a better one. Maybe they're not good at the marketing or something. They missed something there. Yep. Hey, just make more houses and multifamily homes, home zones especially. Well, think about it. What might have caused all this? Building brand new apartments in those opportunity zones, huh? Now we say you want to cap the rent. Wait a minute, the government gives and then they take. Yeah. Hey, Dusty, you think this rotation at XLF, XLI is here to stay, or you think it'll short-lived couple weeks? Well, actually, was it Morgan Stanley? You know, let me see. Because they were the first to say, wait a minute, if we have these, no, I'm sorry, it was Bank of America. So Bank of America says, hey, if there are rate cuts this year that will lower our net interest income by about 2% in the fourth quarter compared to if there are no cuts. That was the first time I'd seen that from a bank and say, well, we know rate cuts or looks like they're coming. How's that going to affect it? Can we keep some kind of projection there? So that didn't seem to bother the banks, but I would pay more attention to that if you're looking at the XLF, which is, you know, the big banks, before doing anything there. And also remember, it's one of the more overbought sectors in the market right now, just in the real short term. So I don't know that I'm excited to pay up, you know. Schwab going down was having an impact on their funds like the SCHD. Well, no, that's a different ETF. So they are the owner of that ETF, but their company's not inside of it. I didn't say that right. You know, if you look up the holdings, right? So there's different holdings in there. Dividend paying holdings. Yeah. Keep the professor going strong, man. I love it. Won't lowering interest rates cause small caps to go crazy high? Yeah, that's what's happening. The belief that there's about to be lower rates, and so everybody's rushing into it. That is 100% the reason. And value stocks too, by the way. And microcap stocks. So even down the line. I realize you seldom mention stocks beyond stocks in the Magnificent Seven, but do you think Plantair is? Well, so I actually like looking at small caps. It's just like, imagine if all they did was talk about small caps all day here. Is it the most exciting? So I try to focus on the bigger names that had some kind of news or something that's driving a different area there. I'm not trying to always talk about it. Right now, I'm talking more about the Magnificent Seven because, okay, this could be a problem, right? Well, if you're looking for the market to fall, maybe it's not a problem, but you know, we just got to realize where they're at, and that's why I keep picking on that one. Sorry. But we can mix it up. You guys tell me. You know what I mean? Swamp Rat, hey, man, should we quadruple the rent before the... Yeah, right? Hey, you're out. New guy, you're in. 100% hiking the rent. Now, that's using your brain. You're 100% SCV. Oh, whoa. What are we talking about there? We're not talking about stock. No. Are we talking about Santa Clara? What? Oh, shoot. Yeah. Thanks, Cody. Help me out there. 100% small cap value. I thought you were talking about the drum corps. You know what I mean? Because, I mean, that's a pretty nice show, too. Although if you're a drum corps person, kind of liking the Mandarins, they're not going to win, but it's like, I like that style right there. That's pretty cool. Yeah. Hey, yeah, by the way, we were thinking, could we just do the show at 4:30? Because usually I'm just sitting around waiting to get started. You know, maybe 4:30 will work for you guys. Thanks for the clarification there. Sorry for the embarrassing misstep. but you know, it happens. Okay, so tomorrow you have, hold on, Ally, smaller banks, brokerage firms, etc. Johnson & Johnson, Discover's going to be in there, Equifax, Steel Dynamics, United Airlines, and Las Vegas Sands. Not really any market movers. As we go into next week, that's where that begins, where one stock's earnings will just shake up the NASDAQ one day and all that. So we'll have some fun with that one. And yeah, Ross is good with 4:30. We're going to do 4, yeah. Okay, good. All right. I love it. You guys enjoy the rest of your evening. I'll be back tomorrow. We'll do it again. You know what I mean? More lessons, more discussions from one of the only advisors that can actually talk about and teach the markets. Adios.